You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
The trading day doesn't start when the opening bell rings. Pros understand that risk never sleeps, and market-moving events happen around the clock. How can you arm yourself with the information you need to understand what's going on across the pond and how it can impact your portfolio? Welcome to the European Market Brief, your go-to source for information on the fast-moving European derivatives markets. Each episode brings you expert insights into the latest market trends, discussions of cutting-edge trading strategies, breakdowns of exciting new products, and analysis of thought-provoking trading activity. The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of Euro stocks, V stocks, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com. So join us as we shine a spotlight across the pond and explore the cross-border volatility, regulation, and innovation that makes the marketplace so fascinating. It's time to get the European Market Brief.
All right, everybody, that music means we are back. It is time once again for the European Market Brief, the program where we gaze across the pond, see what's lighting up the Eurozone and all the markets therein. My name, of course, Mark Longo from the Options Insider Radio Network. Your home now for 19 plus years. Yes, wild, 19 plus years of your favorite options podcast. Next year, the big 2-0. I wonder what we're going to do. I guess you have to stay tuned to find out. And of course, stay in tune. Make sure you stay tuned to theoptionsinsider.com/pro as well. The upcoming Vol Deathmatch 2.0 coming up, as well as, of course, later today, we'll be chatting with our good buddy, Mr. Vixologist, talking all things vol, index vol, equity vol, you name it. Should be a fun time. Theoptionsinsider.com/pro is the place to go as we go around the horn, see who's joining us on this episode of the European Market Brief. First, to a volatility lake house near you, we are joined once again by the once future and present Dr. V Stocks, aka Mr. Russell Rhodes, now holding court at the Kelley School of Business. Mr. Rhodes, welcome back to the show, sir.
Yes, I am patiently waiting for the ice to crack on the lake. It's just, I'm tired of staring at ice. I want to see more than just that. But I'm actually today is not the Indiana Rural Lake House. Today is the professor office at the Kelley School of Business. So I'm chiming in from here, and I'm actually talking about stock indexes this afternoon. I love when I can kind of double dip with information that I have to regurgitate over the course of a day.
All right, and then joining us in the Eurex hot seat this episode, he is a repeat offender. He last joined us back in October of last year. I guess he liked it, because he's back for round two. Our old buddy, Mr. Eugene Moore, the product and business development specialist over there at Eurex. Eugene, welcome back to the European Market Brief, sir.
Thanks, Mark, and Russell and Lex, of course. I'm happy to join again. It was really a great experience back then in October. And yeah, I'm happy to join the conversation today. Thank you very much.
You know, they say the second time's the charm. Eugene. And then last but not least, joining us in the guest chair this week, a newcomer to this program, even though he has been on the network in the past. He's Mr. Lex Luthringshausen, the SVP of Business Development. A lot of biz dev going on the show today over there at Tradier. Lex, welcome to the European Market Brief, sir.
Yes, thanks, Mark. Thanks for having me. This is going to be interesting, the European brief. I'm going to like this. I might learn a few things myself, but I'm excited to be here.
I learn things every episode, so it's always fun. As I mentioned, you've been on the network before. This is your first time on this program. A little bit of a distinct audience here, so really quickly give our listeners on the European Market Brief a quick overview of your background as well as what it is you folks do at Tradier.
Yeah, so I am on the media side on Tradier. So we host a week-long media channel centered on education mainly. Most of our traders are in the option markets, so we focus a lot on options. And as Russell knows, we speak a lot about VIX and about volatility, which is always interesting to the retail options trader. I also do a lot of strategic partnerships and relationships around the globe relative to our business, and we like to be good friends with the exchanges and the regulators and what have you. So I do a lot of that sort of thing as well, but mainly on the media side, I would say.
All right, then let's get started on the media side. It is time to kick off our Continental conversation.
It's time to catch up with the thought leaders who are shaping the European derivatives markets. It's time to have Continental Conversations.
All right, everybody, welcome to the Continental Conversations, the portion of the show where we drill a little bit deeper into a product or a market over there in the Eurozone and explain what's going on there, maybe how you can utilize it in your portfolio. At the very least, what you should be keeping an eye on. And today we're going to go back to the DAX. If you're saying, wait a minute, you guys talked about the DAX already, you are correct. The last time we chatted about the DAX was actually the mini DAX, and it was back on episode 11 from October of last year. Coincidentally enough, the last time Eugene joined us. So if you want to go check that out, if you're a newer listener and you want to do a little bit of a deeper dive into all things DAX, I heartily recommend you start there. We're not going to really do all the basics again. Go check that out if you are interested. But before we get into all things DAX, really quickly, Lex, here at the top of the show, I'm curious for our listeners. You kind of mentioned what you do over there at Tradier, but tell our listeners a little bit about Tradier itself. Who's using the platform? What are they trading? What's going on? What's the hot thing over there at Tradier right now?
So Tradier is a fintech sort of brokerage. Okay, at its base, it's an online retail brokerage shop, much like the other ones that in the country. The big spin that we have is we have a more fintech sort of offering with our modular APIs, we like to call them. And what that allows you to do as an account holder is you can take the building blocks in our ecosystem and stack them together and arrange them the way you want so that your workflow as a retail investor trader is perfect for you. And we are very much into the automated bot world for retail trading. So we see a lot of that, especially when you put in the two letters AI into everything now. We're seeing a lot more of that sort of thing in the marketplace. And what we do is we facilitate those third-party platforms so that they can provide tradability to their customers. So we're like a B2B to C sort of offering. So there's about, probably 100 plus, I want to say now, third-party partners in our ecosystem. And as a Tradier user, you have access to all those. Okay, and you can use multiple ones. Everything is returned, and we also have our own products built into the Tradier dashboard. There's a mobile, a web, and a desktop version. To your question about what am I seeing relative to what our users are doing now, full disclosure, we're not in the the European markets yet. We are making our way there. We do have a lot of European clients, however, who like to access the U.S. markets. But what's similar in terms of interest, I'm sure to like a DAX sort of client, is European style cash settled indices in this country are berserk with retail people, especially when we talk about zero DTE stuff. So that, and we've always had zero DTE. I get it. It was once a month in the old days. Now it seems like it's every day for like 2-3 weeks out. That is a rage right now. I mean, and I think if you talk to our good buddy Henry over at SIBO, he would tell you that probably 51% of that business in that product is part of that zero DTE regime. So that's what we're seeing a lot of, Mark.
So you're saying the 0-day infection has spread across the pond. Now the Europeans are beaming in here because they've caught the bug as well, Lex. That's what you're saying?
I think so, man. They love it. I mean, when they open up an account with us, that's the first thing we see starting to trickle in is the zero DTE thing. And to me, anything within a week is a zero DTE to me. That which is probably my least skilled spot to trade. I'm a little bit more of a 11 to 21 day kind of guy, but I'll adapt.
I think a lot of us who cut our teeth as market makers, the 0-day thing is still a little bit anathema to us. I don't think anyone, I know for a fact, I was down at OIC when they announced this, and I don't think anyone batted an eye. They thought they were just filling in the last 2 days on the weekly calendar. I don't think anyone thought this was going to be the sea change in the index world. And now fast forward to last week, of course, the equity option world as well. We'll come back to that, I think, in a little bit because it is inescapable. As you mentioned, even the Europeans have caught the bug. I thought the oceans would insulate them, but I guess the contagion has spread across the pond as well. So we're going to come back to all things 0-day in a second. But let's drill down a little bit into DAX. Mr. Rhodes, we will start with you. Like I said, we've done a bit of a deeper dive into DAX and the mini DAX on the show, so we don't need to do all the explanatory fun again. But, obviously it's been a few months since we've talked about all things DAX. Obviously, a lot has gone on in the markets and in the Eurozone in particular since the last time we chatted about it. From your perspective, sir, what have you noticed in terms of changes and developments on this front since the last time we checked in on it, sir?
Well, it's more of a macroeconomic change that's going on between Europe and the U.S. I know there seems to be an awful lot going on between Europe and the U.S. And the geopolitical standpoint, but I'm going to try to stick with economics as much as I can today and lay off of the politics. But ad nauseum, I probably talk about on all of your programs about what's the Fed going to do next? Are those odds changing? You could see the indices in the U.S. being driven some by it looks like they're not going to cut. Now they are going to cut. There was a very close correlation between those two. We're still somewhat of a rate-driven market in the U.S. If you believe the futures markets in Europe, there will be no interest rate changes in 2026. So one of the reasons you may want to pay attention to, one of the things that you always want to do is if you're trading different markets, you want to make sure they're behaving differently. Two versions of something that really represents the same market isn't going to get you very far. And the European indices do trend in line with the U.S. indices, although there's quite a disconnect in performance periodically. So far this year, the S&P is up 2%, the DAX is up 2.1%. So they're moving up in line with each other. Eurostoxx has outperformed a bit. If you take the whole basic economic cycle thing into account, and we haven't bottomed out quite yet in the U.S., but we have bottomed out in Europe, because if you take what the central banks are doing with respect to interest rates as what's going on in the cycle, you would expect some outperformance out of Europe in 2026 versus the U.S. They should be having a little bit of a head start, and there's still some uncertainty with respect to the U.S. Economy versus what's going on over on the continent. So things on an economic basis seem to be a bit more stable in Europe than the U.S., and that probably will result in some outperformance in their equities. Also might result in less volatility in DAX and the Eurostoxx 50 versus the U.S. And what's unusual, I feel like I'm using up all of my points in the first question, but what's unusual, and I do want to dig a bit more in the weeds on this, is that VIX was at a premium relative to the European volatility indices, the V stocks and I call it VDAX. For the majority of trading days in 2025, all but about 3 trading days this year, VIX has been at a discount to the 2, which is what you normally expect. So more volatility is being priced in the European market, but I feel like there are more potential potholes for the U.S. market.
There are potholes aplenty, sir. On both sides of the pond. Eugene, will now turn to you, sir. Obviously, you are based in the Eurozone, so you see these developments day in, day out. It's been a little bit since we checked in with you, so a similar question for you. What evolution have you seen in the space, and what's driving some of that evolution over there in the Eurozone, in particular in Germany right now, sir?
Yeah, good question. Thank you for that. So what's going on in Germany, or Deutschland, as we call it? We had over the past years very much stagnation in the German economy. Markets have been not developing very well. Germany is by nature very export-driven, and exports haven't been working that well. Then in 2025, the German government changed. So there was an extraordinary election because the old government didn't get the trust anymore from the people. So we have, since last year, a new chancellor, Friedrich Merz, and he is from the Conservative Party. Previously, Olaf Scholz was from the Social Democratic Party, and Friedrich Merz is from the Conservative Party. And one of the first things he did was starting government-driven spendings, in particular on the defense side. I mean, we all know last year one of the biggest single stock names in Germany was Rheinmetall. Nobody knew that share before, but since last year it's well known. It's a military defense sector single name, which is making heavily revenues and business due to the massive spending into that sector. So what Merz is doing, he has a government-driven spending program launched, and this already had like a big boost in the first days on the index. And what we see right now, not only the defense sector, also all or some other sectors, which we maybe can talk about later, industrials take advantage of out of this big spending program. In terms of forecasts for this year, various sources see GDP grow between 0.5% to 1.5% in 2026. So we are moving from a path of stagnation into coming back to the growth story, given the change in government, but also given the massive spending package here on that side. Nevertheless, there are still some headwinds. Russell already mentioned it. The tariff topic is still ongoing, and you never know what next tariff can come up. And of course, also the Ukraine conflict and other geopolitical problems can bring this grow segment a little bit down again.
Well, you mentioned the sectors. Let's just get to that now, because one of the things I enjoy about this program, I enjoy many things, but one of the things I enjoy is it's a bit of a departure from the just endless Mag 7, Mag 10 AI/tech conversation that dominates the U.S. markets. Nobody over here cares about anything outside of AI and tech. You might as well really have an S&P 10 for all the interest all the rest, the other 490 get out there on a regular basis. So it's kind of refreshing to hop on this program and talk about some other things. You mentioned the defense sector. That's obviously been a big driver in the Eurozone for a while. There's some questions maybe about whether the impact of, if there is some détente in Ukraine, what the impact will be there. We talked recently on this show about financials blowing the doors off last year in the Eurozone, 75-76%, somewhere in that ballpark. Again, no AI needed, just a hot sector in the Eurozone. So let's drill down a little bit. Our audience likes to look for specifics. When you're looking at the different sectors, what's hot? What's lighting up the DAX right now? And maybe what do you think might be on the horizon, sir?
I mean, as you rightly said it, the industrials is the biggest sector in Germany. Historically, Germany is a engineering nation with many industrial firms. Siemens, for example, is one. As said, Rheinmetall is the star. But also Airbus, for example, is headquartered in Germany, the airplane construction firm. So that is historically a strong sector. And of course, with all those government spendings, we're seeing good development here. And that, of course, also helps the export into the world. What else can we look at? I mean, when we speak about Germany, everybody speaks about the automobiles. Mercedes-Benz, BMW, Volkswagen, they in the past had some pressure because the export was not running anymore right. There was more competition from China. But also here, given the headwind from the spending, from the government spendings, we're seeing increasing orders in that segment. So those automobiles coming back into line. And I mean, everybody likes the efficiency and the good-looking, nice cars. So we're back on that track. As you said, financials have been picking up pretty much well last year, over the years with stagnation. Also here, namely Allianz, the German insurance company, which is globally active, but also the biggest German bank, Deutsche Bank, is getting back into the business following the growing business from the industrial side. When it comes to tech, Germany is not so much represented yet, but I would say that's something definitely in the pipeline. The biggest German tech company, SAP, is globally known, globally expanding. AI is certainly a topic with SAP, but I think SAP is focusing on their core business, and this is just technology with a German engineering drive to get into the industry. On the side, more a defense sector, but very stable, is the healthcare market. Here we have global brands like Bayer or Merck, which provide excellent pharmaceutical products, and they are globally active and into the market. I would say that sums up the sectors that we have in Germany and what could work for 2026.
Good-looking German cars, eh? Interesting. It might be a debate there between the Germans and the Italians. Who makes the better-looking car? If you're talking function under the hood, I go Germany all day. If you're talking a nice, sleek aesthetic, I might go Italian. But you know what? That's a conversation we could have maybe later on in the show.
Maybe I'm too biased.
You might be a little biased. You might be a little biased on that one. But I digress. Let's go out now. Mr. Rhodes, when you're not talking to us here on the show, you are educating the young minds of the future on all things finance, including what's going on over there across the pond. Going back to our good friend, the DAX, obviously you have to teach folks about this. How do you approach the DAX when you're talking to students, and maybe more specifically, more interestingly, some of the differences and the nuances therein? Is it just as simple as, hey, S&P 500 is all tech all the time with a little bit of everything else, and the DAX is all these other industries and sectors we were just talking about, or is there more nuance behind it? And also, where do you fall on the heated design aesthetic of cars in Europe debate, sir?
On the debate for cars, I was going to keep that to myself. Being a German car, a very proud German car owner.
Well, there you go. You've spoken with your dollars.
Yeah, I would say, Italian cars might be pretty, but I really don't like spending all day at the repair shop.
I didn't say they worked well. I just said they looked nice. Like the Lamborghini Countach is perfect for a poster on your wall. I don't think you ever want to drive it.
Yeah, that's a much more diplomatic way to put it. So when I'm talking about the indexes, which like I said, I'll be doing today, and I think on the surface, a lot of Americans just think that, and I can just already talked about some of the different industry differences. But then, I like, and sometimes it works and sometimes it doesn't. Fingers crossed this afternoon. But I'll talk about if you think that China's getting ready to recover big time, and you don't want to directly invest in China, but you want to have some exposure there. Well, the DAX actually has more sensitivity because they're in the in the global manufacturing sector, or have more exposure there to China. They've actually got a bit. They actually do have a bit more exposure to U.S. growth than the Eurostoxx 50, especially because of the large industrial weighting in DAX. So you can almost think of DAX as a more volatile, economically sensitive index than the Eurostoxx 50. And we know from all of our option backgrounds that there are certain types of traders that are attracted to more volatile than slightly less volatile. Also, currency, which I always admit is a weakness of mine. I feel like I need to go away for a couple of weeks and read a couple of currency books. I think we all have little blind spots, and mine is one. I know currency has been in the news an awful lot lately, and because DAX is more reliant, and I'm speaking of DAX and the Eurostoxx 50 like they're individual companies, but it's kind of a way to visualize the differences between the indexes. DAX is more reliant on exporting, and if the euro is strengthening versus other currencies, that can actually have more of a negative impact on the DAX than the Eurostoxx 50. So if you've got an opinion on that, on the currency, you might actually look at the indexes. Everybody is always thinking about the first step there, but thinking about what the related steps may be, or the related markets might be, is often a better way to go. Much like playing the AI, we probably didn't think I would bring it up as a theme, but I'm in Indiana. I go back and forth to Chicago periodically. You would not believe the amount of data center construction right along the expressway, along with a giant drone delivery facility that they'll like put a package in and launch and go back. But the technology move that we're seeing right now, the internet, when it became a thing, we didn't necessarily need a lot of the physical plant that we need for AI. And because of that, a lot of industrial stocks are looking very attractive, because they are going to benefit for years over the build out around all of this. And it was just mentioned that Germany may be doing some catch up with respect to technology, and maybe if Germany is looking at becoming the AI center for that part of the world, there's going to be a lot of construction that needs to happen, and that would definitely benefit some of the larger companies in the DAX.
Yeah, a lot to get to there. I want to keep going on this index trend, but Lex, you said something at the top of the show that made my ears perk up, and I want to come back to that now. That is the inescapable virus that is 0DTE. We always talk about it through the U.S. lens here on the network, but I am intrigued that so many European customers are beaming in over there at Tradier to trade 0-day as well. So if you have any thoughts in terms of what those folks are slinging on the index side, and then you joined us at an auspicious moment here in the markets, because just last week, as we were recording this, listeners, here in the U.S., they added the other leg of the 0-day equation that everyone has been asking for, which is effectively the components. We've had the indexes for a little while. Now we're having your Mag 7, your Mag 10, call them what you will, your Apples, your Nvidias, your Teslas are now entering the 0-day game as well. Again, we have limited data. We only really have 1 week's worth of trading so far on these products, but I'm curious, Lex, if you have any thoughts on these new additions as well. Are the clients adopting them, and what are you seeing on that front, sir? So a combo, a twofer for you.
A twofer. Okay, good. Let's start with the 0DT part that exists already. As I mentioned earlier, it is by far the most popular new type of thing that the traders are using. And with retail people, I'm going to get a dog barking here in a second. Sorry. With retail people, they are instant gratification kind of folks, right? I want to be able to put this trade on, take it off, rinse and repeat, and be out of the market as much as I'm in the market, quite frankly. Well, 0DT fits that bill well. So having said that, what do? It is typically an Iron Condor, short Iron Condor strategy. And all that means is they're selling a put spread out of the money and selling a call spread out of the money. They pick the width between their strikes and they take this off mid-morning and do it again, right? So, it doesn't sound sophisticated, but it really doesn't have to be, because they have this ability to back test all these strategies now with all the information that we have and all the data, and which they do, and they do this a lot. And what's funny is that one of the things that we saw at one of the conferences, Mark, was you can see this automation tool working in the graph of when volume spikes. And it was odd because it spiked at 10 o'clock, let's say, and then 10:15, and then 10:30, and then 10:45, and then 11. It does it all over again. So these bots were out there, and they're all retail bots that were hitting every 15-minute increments. And it was like clockwork. You could see that little sawtooth in the graph every time you did it. So they love that part of the game. Now, the other thing they love, I mentioned it earlier, European style options, cash settled. Why? Easy. It's two things they don't have to think about. We don't have to worry about early exercise, and we don't have to worry about taking delivery of something that they don't want to take delivery or can't afford to take delivery of. So they pretty much can either leave this if they're not closing it, don't have to worry about anything, and move along. Relative to the stock world, now some of they started releasing some of that. Again, very highly subscribed to where it's listed in the equities. They still love it, even though they have to deal with the exercise assignment issue and non-European style stuff, but they still love the short dated stuff. It's just a retail sort of phenomenon that they just love to play in.
So you mentioned they like the cash settled side. Obviously, the new equity options don't have that. They have all the contra exercise issues lingering in the after hours. One of the questions a lot of people have right now that these are launching is how are these two product categories going to interrelate? Obviously, we saw the popularity of the index side of 0-day. Now we have the single name side. Are the folks who are slinging the Iron Condors in the indexes, are they going to jump to whatever the hot thing is that day, Tesla, Apple, whatever? Are they going to do both? Is there going to be maybe a new category of intraday dispersion going on? It's an open question. Again, you only have like a week's worth of data, Lex, so it's kind of hard to analyze the trend yet. But if you had to guess, do you think these are going to be additive product categories? Are the index folks going to jump ship to the single names, or maybe vice versa? What do you think we'll see here?
Yeah, I think so. You mentioned the one of the critical terms, I believe, and we're seeing a little bit of this is, and again, it's too early to say as you mentioned, we're seeing a little dispersion with this. So they may pick their individual high flying equities, and we all know what they are, right? You've said it already, and they get long a little premium in a little bit farther dated sort of strategy, and use the index against it. Now, it's not sophisticated like we did in the market maker days, where it's very algebraic, let's say. But for them, it works, and we're starting to see a little bit of that, where they can defease some of that short premium with a little long premium, and get outlier moves in the individual equities, and take advantage on both. So sometimes they can win on both sides of the equation. They can make their short premium in the indices, and also make a long premium play in those equities. So we do see a little bit of that. That's going to, I think, take a little bit of shape as we move along here with releasing more in the equity space.
How wild is that, to think, obviously, when we first started this network 19 years ago, let alone even a few years ago, we'd be talking about retail intraday dispersion as a viable trading strategy, and your proverbial grandma from Iowa can do her 10 lots and make a decent little income doing that. It's absolutely wild how much these markets have evolved in the last few years. I could spend the rest of the show talking about this. I think we're probably going to come back to it in the future because it is all the rage out there in the markets right now. But I want to keep the ball rolling with all things DAX as well as we keep gazing across the Eurozone. Maybe Mr. Russell, we'll jump to you next. If you have any thoughts, if you want to weigh in on all things index versus single name 0-day, by all means have at it, even though I think we're going to have more opportunities for that down the road. I just wanted to get Lex while he's on here this week. But then also your thoughts, obviously, one of the things that attracts people to the 0-day phenomenon is the bite-sized nature of the contract. It's small, it's cheap, it's easy to execute. And, the mini DAX that we talked about last time certainly plays a similar role there in terms of attracting people with just a less intimidating notional size. I mean, you're talking to students a lot. Size is an issue for them if they're looking to get into these markets. How important is that notional size and maybe making it a little bit smaller, a little bit more bite size for folks who maybe want to start tiptoeing into these waters, sir?
Well, the DAX is, it's one of the things that it sort of has in common with the Dow is it's got if I remember, I got to find that number. Yeah, it's got a really big number, and I don't care what you multiply by that really big number, you're going to end up with a big notional. But that's why they're smaller contracts, and that's why, that's why we have a mini DAX. So looking at an index that's in the 24,000s versus the index that's in the 6,000s, some folks right off the bat might be a bit intimidated by that big number, but and Ian knows the specifics much better than I do with respect to the notional value of the two. But the mini futures, have traded particularly well over there. They're really good for retail exposure between, U.S. markets and the DAX for people over here. I've actually utilized them in that methodology. So size does make a big difference. You like the phrase "way of the dodo." We've had some large futures contracts that as the indexes have grown so much. For instance, I've got I have my derivatives textbook from when I was in undergrad, and it has the S&P at 300. Well, $50 times that is okay. $50 times, or 50 euros times 6,000 becomes a very large contract. So I think the mini contracts are a great way, even if you've got the capacity to trade. The larger size, if you're trying out a new methodology, you're not 100% familiar with the market. These smaller contracts are a great way to dip your toe in the water. And I think that's much better than paper trading sometimes, because you do have, even if it's a little bit of skin in the game, it's still skin in the game, and you're going to pay a bit more attention. So the small size contract is absolutely ideal for individuals.
It's nice sometimes to sprinkle a few in just so you force yourself to pay attention.
Yeah.
Every now and then it adds it to your watch list, and then you have to pay attention out there. Eugen, a similar question for you. Obviously, size is an interesting area of discussion now in the world of finance and indeed derivatives, as everything is getting smaller and more immediate and more bite-sized, seemingly with every new product. From the lens of DAX, what really is compelling for folks looking for some of those smaller products? And also, obviously, we're talking about a different time frame, different trading hours over there as well. So you got a smaller contract, and you've got some different trading hours folks can look at as well. Maybe that also can add to the allure for folks.
Yeah, absolutely. So we started about 35 years ago with the DAX future, with a contract size of 25 euros per index point. Back in the days, the index was around 1,000, 800, 900. But now, because it's a total return index, the index has reached a level of 25,000. So when you take those 25,000 times the 25 euro, you're ending up with a 650,000 notional, which is very, very heavy. So that's why already 10 years ago, we introduced the mini version of it. So we reduced the multiplier from 25 euros to 5 euros. But even with that, we're having, I said, 25,000 euro index point, and we have a 5 euro multiplier. This is still like over 100,000. So this was still too much. So that's why the next evolution 5 years ago was the Micro-DAX, and that's an easy one. 1.1 euro, that makes a nice 20,000, 25,000 euro notional with a low margin for traders. And on top of it, as Russell rightly said it, the DAX has a nice volatility, and also the daily trading ranges are 300, 400, 500 points. So that makes it an ideal trading product for retail investors with a small size, with a small margin requirement. And yeah, that's a good way. Second thing you mentioned, the trading hours, definitely also important for global traders. We extended about 9 years ago, to almost 24 hours trading in the DAX future. Before that, it was only European and US hours, but of course, that was way too less. So we extended into the Asian hours as well. So DAX future, the big one, mini DAX and micro DAX, is now available 21 hours a day. So you can cover all time zones, Asia, Europe, and the US.
We talked earlier about the sectors, and again, it is the DAX 40, listeners. You're talking about the 40 largest companies over there in Germany. You mentioned the vol, but the other side of that equation is, of course, the sensitivity to different macro events. Not a thing we discuss that often here on the network, but for something like the DAX, it certainly is intriguing. When folks talk to you, Eugen, about the macro sensitivity of the DAX, break it down a little bit for our listeners. How sensitive is the DAX to these various macro trade winds that are going on out there? And how important is that for customers who are coming in and looking to trade it?
Yeah, that's a good question. I mean, as said in the beginning, the DAX is mainly or strongly driven by industrial firms, and they have a very high macro sensitivity given their exports and given their manufacturing cyclical business. So that drives the DAX. I mean, on the one hand side, of course, this is bad because the index development might have some ups and downs. But of course, and that's especially for the traders very important, you have good wings in the market. You have good volatility there. So from a macro sensitivity point of view, given this high industrial point of view, DAX is very macro sensitive. As said, the techs are not that big yet in Germany. S&P is one of the firms, of the global players, but also here they're coming more into the market. And as Russell alluded, the combination with techs, AI, and industrial could create a good growth story. So the influence of the techs and also here the volatility in those shares will lead into a good trading instrument using the DAX as a trading vehicle. On the downside, a little bit, we have the pharma shares. They're historically more conservative. There's not so much movement there, so that's swinging out. Those big moves from the industrials and from the tech side. So that's a little bit the trade-off between the macro sensitivity and tempering the downside.
Well, Mr. Rhodes, you have been invoked, I should say, so I'll let you weigh in. If you have anything you want to add, you're our go-to guy talking about the vol side, but we don't talk about the flip side of volatility, which is macro sensitivity. So if you have anything you want to add on that, as well as, of course, the trading hours, as well as we were talking about trading size before, we talked about the mini. You didn't really get to the Micro-DAX. Anything you want to add there as well, have at it, sir.
Well, I just, with respect to the Micro-DAX, decent volume, but really nice, 1 or 2 tick spreads. I was aware that it was very liquid. I did a liquidity study a while back for the folks at Eurex, and the Micro-DAX, we're outside, and correct me if I'm wrong, but I believe we're outside of normal trading hours in Europe now. And I know this is all audio, but I just got a nod from Eugen, though, so I'm correct. And the spread has not been more than 2 ticks for the past 30 minutes or so as I've been watching that market.
Yeah, Russell, we see, that's a great point. We see, especially in the micro-DAX, we see a healthy mix between institutional investors, market makers, liquidity providers, but of course, and that's the relevant part, increasing retail investors using the Micro-DAX, also given the good liquidity and the good order book spreads.
And Mark, you're going to have to help me. What was it? Oh, the economic sensitivity. I apologize. So as far as the economic sensitivity, we've talked about that a bit. It's much more industrial oriented. It really, I can't think of other than, selecting a few stocks, but for investors in the US, that's probably a little bit more prohibitive than investors in Europe. But I can't think of a better way if you think that you're going to see an industrial renaissance in Europe based on a lot of changes that are going on around the world, that the DAX would not be something that you would want to have exposure to in your portfolio. I'm going to jump on a question because I like to frustrate Mark every once in a while. But one of the questions is, what kind of zero DTE products does Eurex offer? I've done a lot of work on zero DTE index options. Just when are they overpriced? When are they underpriced? And there is zero DTE on DAX and the Eurostoxx 50. I have noticed that they tend to be overpriced a bit more than their US counterparts. In fact, over many time periods, if you just consistently were long or consistently short one-day index options in the US, sometimes you would do good being long, sometimes you'd be doing good short. It appears that being short works much better with those European markets. So if you're a trader that's interested in zero DTE and you have the ability to trade, you've been trading the US ones, and you have the ability to trade the Eurostoxx 50 and the DAX ones, the volume's not all that great, but the liquidity is there. And do keep in mind, if you can do strategies with the cash settlement that only involve, working into a position and maybe not even having to work out of that position. So I apologize for hijacking and jumping on a question, but I saw that one on the question sheet and it kind of gelled with what I was talking about right now anyway.
Why follow the order of the show? What fun is that, sir?
I know, Mark.
Why make my job easy, sir? What fun would that be?
You continue to have me back, so I must be doing something right.
It's all the head trauma. I chalk it up to the head trauma. But as Russell alluded, we do have some questions. I want to make sure we save some time for the red phone at the end. We come up against it already. Time flies whenever we go to visit the Eurozone here on the show. So a few more here before we jump to the red phone and answer some of your questions. Eugen, we'll start with you. As we're seeing here in the U.S., the same holds across the pond in terms of all the major indexes are at or near record levels. We talked about the sectors over there and kind of what's driving it from that perspective. If there's any other interesting drivers behind the scenes that you are seeing that are really pushing the DAX to these record levels that you want to hit on, have at it. And then B, of course, looking out throughout the middle of the year and towards the end of the year, if there's any interesting, perhaps headwinds you could foresee that traders should be aware of, have at it, sir.
Yeah. As previously mentioned, as tailwind, definitely the fiscal investments from the government, initially very strong in the defense sector, but also in other industries, infrastructures. So that's definitely driving, and it already has an impact on the GDP. So we see an uptick here, that's certainly for sure. And that, of course, also drives the profits of the financial institutes, which are in very close cooperation with the industrial firms. Another tailwind, I would say, is just the fact that maybe Russell can talk a little bit more about it, but the diversification away from US markets can be seen. We saw it last year, especially all around the discussion on the tariffs. That we have seen more interest from US investors into European indices, into German indices. So I think that's an opportunity for Europe, for Germany, to get into the global investor flow. On the negative side, the key risks, geopolitically, there's still a lot of uncertainties. As said in the beginning, we still have the Ukraine conflict in Europe, which affects Germany in particular. The tariffs and the trade policy is still not off the table. We have been seeing it around the discussions with Greenland. A new tariff can come up overnight. So that's something which we always need to have an eye on. And a third risk factor. Europe or Germany has very high energy prices. I mean, we swifted away from nuclear power that made electricity and other energy components very expensive. But not only that, also, I mean, we have seen in intervention in Venezuela or what is going on in Iran. So there's always the chance or the risk of having impact on the energy side. And that, of course, has a negative impact on German industrial firms.
Well, Russell, you have been invoked, so the last word on this segment will go to you, sir. If you have anything you want to add on what Eugen was laying down, have at it. And then B, again, as you're looking to educate and introduce some new students, new traders to these markets, what are some of the big impediments you see maybe on the execution side, or some really notable, structural differences that we haven't hit on yet that you think they need to be aware of, sir?
Yeah, as far as the DAX versus the Eurostoxx 50 versus VIX, there are periods where one group is, I'll group Europe versus the US, is a bit more volatile than the other, and then there are periods where there's more risk being priced in for European stocks than US stocks. And I always like to invoke what Ed Thorpe told me the one time I got to ask him one question privately was maybe be looking where other people aren't looking. And if you're an equity investor in the U.S., the story's kind of difficult going into 2026. You're reliant on more rate cuts. You got a new Fed chair who coming in, last I checked, I don't think he's spoken to us yet, which is pretty unusual because apparently within a week of everybody going back to Volcker, they actually would make some public comments with respect to their nomination. And I don't think he's really stood out yet. So we don't really know what's going on there. There's going to be excess uncertainty in the U.S. until we hear what he has to say. And then, honestly, there's a lot of questions. Is he going to be as hawkish as he was in the past, et cetera? There's just not that same sort of uncertainty hanging over Europe in my mind. But the volatility, it's been priced a bit higher in Europe. Anticipated volatility has been priced a bit higher in Europe the first 5 weeks of 2026 relative to the U.S. Versus the last few years, year and a half, 2 years, where it's kind of been reversed. So, you also like to use the term juice. There might be a bit more juice. There's more juice being priced into the European indexes right now than the U.S. indexes, but it doesn't feel like, there's a reason for that, or at least a visible reason for that. It feels like Europe's going to have a more smooth year economically than the U.S., barring any major changes. And I just feel like you would have a smoother ride with European stock exposure than relative to U.S. stock exposure.
Sounds like there might be a trade or two cooking up there. And, Russell already jumped ahead to some questions. And the time we have remaining, let's do that now. A little bit of the old red phone.
What's on your mind as you're navigating the wild world of European derivatives? Let's find out as we answer the red phone.
All right, welcome to the red phone segment, the portion of the show where we answer all of your various questions. Thanks to all of you out there who listen, engage, rate, and review, and of course take the time to send in so many great questions. This first one, Russell kind of already answered, so Eugen, I'll let you chime in if you have anything else in addition you want to add. This question comes from Claudio6. He just wants to know, quite simply, what types of zero-day products does Eurex offer? Eugen, anything you want to add to what Russell already put down, sir?
I mean, Russell mentioned it. We have zero DT options on DAX, Eurostoxx, and SMI, especially Eurostoxx, but also DAX is very liquid. We're seeing a high number of liquidity providers. We're seeing tight spreads. We're seeing good volumes, but there's more room for growth. But we made the start, and we're on track.
And along those lines, we got another question here that's right up your alley, Eugen. It comes from Jason Luce. He says, how does the DAX stack up from a liquidity perspective with U.S. index products? We've been talking about a lot of different elements of the DAX during the show today, Eugen. We talked the vol, we talked the macro sensitivity, we talked the various sectors that are driving it. But obviously, when you're coming to it from a product perspective, liquidity is a big factor. Jason, some of our other listeners, I'm sure, want to know, how does DAX stack up from a liquidity perspective with some of the domestic products they may be familiar with?
I would say we cannot fully compare with the US liquidity, but what definitely can be said, we're seeing very good order book liquidity, and we're seeing very tight spreads, not only on top of the book, also on the second and the third line. And on high volume days, we're seeing in DAX 100,000, 150,000 contracts, overall expiries and overall contracts. So the liquidity situation, as said before, given the high number of liquidity providers, given the retail flow, is very good.
And Mr. Doctor, this one's up your alley. This is obviously someone who also listens to Vol Views. This comes from Tom Campiani. He wants to know, is there a way to do Russell's secret weekend Eurex trade? And again, if you don't know what that is, listeners, check out Volatility Views, where we talk about that trade and a lot more every week on Friday. Yet another reason why you should be subscribed to the full network, but I digress. He wants to know, is there a way to do Russell's secret weekend Eurex trade, but using V stocks instead? And has he studied this variation? So Russell, obviously we talk a lot about using some of the levered vol products to play the weekend risk. Not quite the same ecosystem on the V stock side in terms of the availability of the levered products out there, but maybe just from a theoretical perspective, what are your thoughts on trying to do a weekend V stocks versus, let's say, a weekend VIX trade, sir?
I'm formatting the data right now. It's something so just to backtrack, because nobody knows what we're talking about with the Eurex trade. I just found that since 2022, if you bought your Eurex on the close on Fridays and sold it on the open on Mondays, you average about 0.4% per trade. We get it. It's one of those things where the win rate's probably about 15 or 20%. And a big portion of the profits come from just 2 or 3 volatility events. So that being said, I've been trying to do it with VIX and V stocks as well. And what I'm trying to do a bit differently with V stocks is maybe just alter some of the what I consider the open and the close for US hours. It does look like there might be something there just looking at the index, which was my first step, because my thinking was, if it didn't work with the index, it sure as heck wasn't going to work with the futures, because the futures don't react as much as the index. So I do think that there is likely a long over the weekend volatility play in V stocks, and as soon as I find it, like I do with everything else, I will share it with the world. But I do think that there is something to do there.
I love our listeners. They're always taking what we give them and spinning it in interesting new ways. So
I think they just like to make me work.
I think there's probably a little bit of that too out there. They like to see you crunch the numbers. Before we get out of here really quickly, Lex, I'm going to throw you a curveball, because this just came in from our live chat, and it's an interesting question. Frank1209 wants to know, what is the monthly all-you-can-trade fee for Tradier? I know you guys do things a little bit differently. It's not a per transaction type thing, but more of a kind of, as he puts it, an all-you-can-trade type offering. So he wants to know, if he kicks the tires over there at Tradier, maybe start slinging some of these 0-day. Or what is that all-you-can-trade fee, sir?
Yeah, so there's a couple of them real quick. There's a pro plan, let's call it, and that's $10 per month. That eliminates per contract commissions. And then there's a $35 per month version that does the same thing and reduces some of the index fees as well, and futures pricing on that elite plan. So yeah, you pay $10 a month, and that's what you get. We don't charge a commission beyond that. If you like paying commissions, we will always be happy to charge you in the basic plan, 35 cents a contract. But most of our participants, they trade a good bit, and they can do some mathematics and figure out where that break even is in the course of a month. And most choose the subscription fee, I would say.
$10 a month, man. That's wild. That's wild. Things have gotten so cheap, so cheap out there. Wild. There you go. Who asked that? Frank. Good question. There, Frank. Well, that music means, unfortunately, we've come to the end of another sojourn through the world of all things Eurozone. Lex, you were a very patient guest here on the show today. We kind of just hit on some of the cool features of Tradier. Anything else you want to add for our folks? Maybe a little bit of a hint, a little bit of a tease of what they can check out. And also, if they want to learn more about Tradier, where should they go? What should they do?
Yeah, two quick things. First, hub.tradier.com. Make sure you subscribe. It is free. You will get all of our updates. Sign up for the newsletter. That's a once a week thing. It's been growing like mad. That's number one, and that's where you can find all our programming. Number two, and Mark might be a part of this. I'm hoping he will. We are doing a live summit in Palm Beach, Florida at the end of OIC this year. So it's on the back end of OIC, which will be around May 7th, May 8th. Stay tuned for that. That is going to be a real exciting event. So those are the two little plugs I can give you.
I don't think you can handle my appearance fee, but we'll talk. We'll talk off the air, sir. Talk. My people will talk to your people out there.
Perfect.
But check them out. Tradier, Tradier, listeners, is the place to go to kick the tires and light the fires. And Mr. Rhodes, if they're tired of that drunk weatherman in Tampa and instead they want to find some vol musings online, where should they go? What should they do?
Follow me on Twitter. There's no E in my name. That's how you end up with the weather guy in Tampa. So it's RUSSELL RHOADS, and anything that I'm up to, I just throw out there on Twitter, and we'll see if I can get around to formatting my data and come up with a cool weekend V-Stocks trade.
I'm gonna get a cease and desist from that guy one of these days. I keep referring to him.
I kind of worry about it.
It's all your own fault, sir. You've lured me to this spot. In the meantime, check him out. 2 S's, 2 L's, RHOADS on your favorite social media platforms. And last but not least, Eugen, we've been talking a lot of Eurex here on the show. If folks are intrigued, they want to learn a little bit more about the DAX or maybe some of these 0-day products or anything else you have cooking over there in Eurex land, where should they go? What should they do?
Yeah, the source of information is eurex.com. I spell it EUREX.com. That's a very valuable and insightful website where you can find all information about all of our products. And that's the place to go.
Eurex.com, EUREX.com, the wellspring from whence all of this European market brief content flows. All right, and Eugen, while folks are checking out Eurex, there's something special they could check out if they head on over there to TradingView. We talked about it on the last episode, but it is now off and running. Of course, I'm talking about your big The Leap trading competition. Give our listeners an update on it. What is it? Where can they find out more about it? And how's it going so far?
Yeah, it's a great initiative. It's called The Leap. It's in cooperation with the TradingView. It's a paper trading competition where everybody can participate for free. We started on February 2. Right now, we have over 50,000 people signing up and participating. As I said, it's a paper trading game where you can trade the most liquid Eurex futures, Eurostox, DAX, Europe 600, V-Stocks, etc., etc. And it's not only for fun. We also have some rewarding prizes around. We give out gifts and prizes for up to 20,000 euro, including free Eurex data subscriptions and TradingView subscriptions. So I think it's a great opportunity. You still can do it until February 27th. So please join. Also here, eurex.com/competition.
Check it out, listeners. Eurex.com/competition to learn more. That is going to do it for the European Market Brief on the network this week. If you're hanging out in the Pro, we'll be back a little bit later today with our good buddy, Mr. Vixologist, tackling all of your many and varied vol questions. Maybe I'll throw some V-stocks at him just for a fun curveball. See how he responds out there if you want to check that out. And also, if you like vol, you want to check out the upcoming Vol Deathmatch 2.0. It's all over there on the Pro, theoptionsinsider.com/pro. And we're back again with our usual array of content throughout the rest of the week until we're back again fairly soon. Another episode of the European Market Brief. Stay safe out there, everybody.
The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of Euro stocks, V stocks, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.